Hey guys, Will here. So I'm filming this in August 13th, and last week Klaviyo announced really record Q2 2024 earnings. And I was talking about it with a few people, and one person asked me a very interesting question. Is Klaviyo the next HubSpot or Salesforce? So I wanted to sort of dive into that. I also wrote an article on this on LinkedIn that I'll share with you. But I sort of wanted to unpack how I feel about that question. I think it's a really interesting question, and there's a lot of different ways for Klaviyo to grow. And so I'm going to sort of unpack like sort of 8 ways I see them growing. But first off, let's just talk about where Klaviyo is at right now compared to HubSpot in Salesforce. So I'm going to take a really big macro view here. So Klaviyo is about an $8 billion marketing cap, and in Q2 they announced about $220 million in quarterly revenue. HubSpot, on the other hand, is about a $25 billion market cap, a little bit under that, and they're doing about over $630 million in revenue. And Salesforce is a $240 billion marketing cap, and they do over $9 billion in revenue per quarter. So when you think about it like that, Klaviyo has a long way to catch up to something like Salesforce. They're doing way more revenue and way bigger marketing cap, but they're not that far off from something like a HubSpot. HubSpot is maybe 3 or 4 times bigger than they are from a marketing cap perspective, and they're only triple the amount of revenue that they're doing. So I'm going to talk about, I do think as I'm pretty bullish that on Klaviyo being able to reach that sort of level of marketing cap or revenue or market cap in the next coming years. So I'm going to sort of unpack, 8 different ways I see them growing. So if you're a CMO or a CIO, or if you're an investor that's interested in Klaviyo, this is going to be a good thing to watch. Like I said, if you're an agency or a freelancer that is wondering, okay, should I keep doing services on this platform or focus on other platforms, this will be a good video to watch. Or if you're a store owner, or you work on an e-commerce marketing team, and you're wondering, should we stick with Klaviyo? Should we use another platform? This will be a good video to watch as well. So let's jump into 8 ways they can grow. Before I do that, I want to give a quick disclaimer. I am somewhat biased. I own some Klaviyo stock. I'm also own an email marketing agency that focuses on Klaviyo. The main reason why we do that is not because we're paid by Klaviyo, or I didn't get paid to do this video. It's mainly because it's still the #1 platform I see driving outcomes and results for our clients. If another platform came around, then I would talk about that. But it's still the #1 tool our clients are using to really increase their revenue and drive outcomes with their data, with email marketing and omni-channel marketing. So that's why we mostly focus on Klaviyo. So with that out of the way, let's talk about where I see the business heading, where I see the stock heading, and where they can grow. So the first way they can grow, and this is pretty obvious, is if there's another bull market rally in the next coming quarters, this stock is going to take off, in my opinion. Especially if interest rates drop. If you think about it, Klaviyo is closely related to Shopify. Actually, most Shopify Plus stores use Klaviyo. Also, a lot of the smaller Shopify stores are using Klaviyo. So it's a very it mirrors that business in a lot of ways. So if you see Shopify taking off in the next couple quarters in a bull market rally, or any tech stock or SaaS app, I think Klaviyo is really well poised to do that. Also, when you think about Klaviyo, they're rumored to be profitable or approaching profitability in the next coming quarters. And that's hard to find in a lot of the SaaS space. When you look at something like Snowflake, which really took off, they're not really that profitable. I was looking at Asana, a SaaS app that I use. Again, it's seen a lot of growth, but it's not profitable. And on top of that, when you think about the tailwinds that that could fuel the next bull market run, like AI or SaaS or tech or ecom. Klaviyo is really well positioned in all of those tailwinds. So I think a bull market, if we see that anytime in the next year or so, or two, like this, I think Klaviyo stock is really going to grow. Um, Outside of that, let's just jump into the business, and not so much speculation, like how I can see the business really driving market cap and revenue growth. So if you listen to the earnings call, Andrew, the CEO, shared a couple different things that I felt weren't, or a couple different things he shared there that I didn't feel like a lot of people really asked questions about, but signaled to me as an insider who lives and breathes and operates in Klaviyo every day that, wow, Klaviyo is really growing here. And that is like what they're doing to expand into other markets. One thing he mentioned was that there was an integration with Toast, which is sort of like a POS system for restaurants. Think of it like the Shopify for restaurants. And then he also signaled that they signed a multi-billion-dollar deal with a big billion-dollar sort of national grocery store chain. So with that said, when he mentioned that they expanded, that they had done this integration with Toast, that signals to me that they're trying to go into the restaurant space. Klaviyo has routinely mostly been centered around the e-commerce space, mostly in small to medium businesses, some mid-market businesses they've gotten a lot of traction with, and they're starting to get more traction with enterprise e-commerce businesses. But they really haven't expanded into any other category really out of the global e-commerce market. I mean, you can use it outside of that, but that's traditionally where they've gotten a lot of traction. So they're trying to go into this, other $4 trillion global restaurant business. I mean, what traction are they getting there? Are we talking about like small little mom and pop food trucks that are using Toast? Are they getting traction with more mid-sized chains like a Shake Shack or Zaxby's down the street from me, or Raising Cane's, or like an In-N-Out if you're out on the West Coast? Or could they get huge traction with like huge publicly traded chains and franchises like a Chipotle or a Starbucks or a Dunkin' Donuts? Dunkin' Donuts is based in Boston, so is Klaviyo. So I mean, these are the things I would be looking out for if I'm speculating on this stock, or if I'm a service provider thinking about providing services to Klaviyo. Like, are they getting more traction up market with restaurants? Because if so, that could bring an entirely different category into the app, and could really balloon the market cap and revenue, I think, in the next coming years. Same with the grocery chain. I mean, one thing to think about that grocery chain announcement is he said they signed a deal with a multi-billion-dollar grocery brand. So it's not like they signed a deal with a local mom and pop grocery brand. They probably signed a deal, and I don't know who it was, but I mean, I'm based in Atlanta, Georgia. Our biggest grocery chain is Kroger. I've lived in Florida before. It was Publix. I've lived in Texas before. It was Heb. So in my eyes, it was a restaurant of that scale, like a Trader Joe's or a Sprouts even, So they signed a deal with a big sort of conglomerate there, maybe even a publicly traded company. Are they going to get more traction in that space? Could you see them even move further up market than that and sign a deal with the whales like Costco or Walmart or something like that? These are things to look out for in the next coming quarter. If you're interested in buying this stock, or you're a service provider that's thinking about servicing in this market. So that's growth path number 2. Another big growth path and I'm going to get into some sort of inside baseball here, is the SMS consolidation that I'm seeing personally going on in the mid-market and small to medium-sized business segments. So in my opinion, Klaviyo is sitting on a huge opportunity here. And I wrote about this in the article, and I use an example that I think a lot of people might be familiar with, Skims, like the brand that was sort of launched by Kim Kardashian. So this is now a $4 billion brand by valuation. So they're into the mid-market category, maybe even to the enterprise category, but they're definitely doing hundreds of millions of dollars in revenue. And what they're doing right now, Skims, and there's a lot of brands out there that are like this. They're doing their email marketing on a platform like Klaviyo, and they're sort of using Klaviyo as the central brain of their data. But then they're doing their SMS marketing on Attentive or some other platform. And you might be asking yourself, well, why is that happening? Why would a brand do that? And from my experience, it's that a company like Attentive came in and offered sort of low cost deals. They have a really good sales team, an aggressive sales team, some might even say, and offered low cost deal to Skims to sign on to like an annual contract to do their SMS services. And it seemed like a good deal at the time, especially if you were like a CFO or a CMO at Skims. You're like, wow, we can save this so much more money by using Attentive instead of Klaviyo SMS. And what I'm seeing now is a lot of mid-market brands like Skims or SMBs that are a little smaller, but probably doing over $10 million a year in revenue. They're regretting that decision. And the reason they're regretting that decision is because, yes, they might have saved some money, but they're losing out. There's this huge opportunity cost they're paying. They're losing out on huge sort of opportunities with their data or like personalization opportunities they could be having because they're on two different platforms. On top of that, it's just making the workflow harder as well. Like when you're having to manage segments and campaigns across two different platforms, it confuses people. And I'm starting to see, at least within our clients, more of them consolidate to one platform. And it's no secret that, if you're an e-commerce brand or you're an agency that, when it comes to choosing between something like Attentive or Klaviyo, Klaviyo is the better app. And, it's not just me seeing this. They talked about this on the earnings call. Andrew mentioned a well-known brand, Barstool Sports, who's started by Dave Portnoy, who's, well-known for various reasons. But Barstool has an e-commerce store as well. And it's run on Shopify, and they're using Klaviyo for email marketing. And what was probably happening is they were on another one of these platforms like Attentive, and they signed them to some annual contract, and they ran into scale problems where, hey, we're now doing millions and millions of dollars, and we have all these data problems, and we're now on this like legacy sort of, or not legacy, but this SMS solution that's great for small businesses, but we need we need to be on a consolidated platform. And so, that's what happened. They migrated over to Klaviyo for their SMS services. Klaviyo talked about another store on their earnings called Boston Proper, who is listed as Attentive's #1 case study. But again, they ran into scale issues, and they're like, hey, like we're running into issues. We need to consolidate and be on one platform. So I'm seeing this behind the scenes go on. Klaviyo is mentioning this. And I just think over the next coming quarters and years, you're going to hear about more and more mid-market. And again, someone pointed out to me, hey, like, just because Klaviyo, that might not, just because Klaviyo is getting these mid-market brands that, some of the smaller businesses who are more, focused on features of an SMS tool, that doesn't mean they're going to win all that. And that's not what I'm saying. I'm saying is that a lot of the bigger brands, like the mid-market brands, you're doing over $10 million, $100 million even, you start to run into scale issues, and it makes sense to consolidate onto one platform. And I think that trend is just going to accelerate over the next few years. Another thing that's going to accelerate is enterprise adoption of Klaviyo. It's no secret that it is a way more user-friendly platform compared to some of their competition. When I think of their competition, I think apps like Braze and Iterable come to mind in the enterprise. But even like more legacy stuff like ListTrack or Adobe Campaign, even Hubspot and Salesforce to some extent. We had a large project on SAP Marketing Cloud last year that was way more difficult to use than something like Klaviyo. So you're seeing this, I'm seeing this. I'm seeing a lot of these more big enterprise brands who want their marketing teams to work on a more user-friendly CRM migrate over to Klaviyo. There was a Forrester report that I linked in my article where it was something like like enterprise marketing teams, once they migrated to Klaviyo, they went from spending 32 hours a week to 8 hours a week managing campaigns. It's pretty crazy. Like the amount of time that can be saved by just being on a more user-friendly CRM. And again, I've seen this firsthand. I talked about the project we did last year on SAP Marketing Cloud. And one thing is it would take us like literally a month sometimes to send out one campaign due to all the tech stack blockers and issues we had to deal with, and then chasing around different people from different departments. And with Klaviyo, again, like you don't have to do that. And with the mid-market brand that I mentioned, like Skims, like you can go on sites like Mill.com and see how many campaigns they're sending out every month, and they're sending like 20 or 30 a month because they're on a platform that's way more user friendly and is way easier to scale, and like at scale is way easier to use. Another reason why I think these enterprise brands are going to move over to Klaviyo is because also it's like really easier to track revenue and ROI. And a lot of some of the competitors that I mentioned a couple minutes ago, you can't even track revenue in their platforms. Or if you can, it's like so broken and it's just all messed up and it's not really clear. And in Klaviyo, it's super easy. It's really like one of the, like literally right when you log in, you see what they call the Klaviyo, the CAD, the Klaviyo attributed revenue. And it's something that marketing teams track. It's a KPI that Klaviyo tracks internally. So I think just by really focused on that, being focused on like the revenue that Klaviyo drives and the ROI is really going to significantly stand out against the competition in the enterprise sector. And it's no secret, if you're familiar with Klaviyo, or you're an agency watching this, or you're an e-commerce brand that's already using Klaviyo and has it built out, that it's no secret you can log in there and you'll see like 20 or 30% of your revenue coming from Klaviyo. I've seen it even higher than that. And some people will push back. They'll be like, hey, that's not accurate. Klaviyo has this attribution window. So for any like super marketing nerd out there, yes, there is an attribution window. Basically, Klaviyo is set to 5-day open. So if you send an email out on a Monday and a customer opens it, but then for whatever reason they randomly decide to buy on a Thursday, then Klaviyo will attribute that as a sale for that email because it's a 5-day conversion window. But here's the thing: you can change it. So you can change it to whatever you want. A lot of platforms you can't. They're not very clear. I mentioned Attentive. I don't even think Attentive has an attribution window. I literally think if you open an email or an SMS on January 1st, and then you come back, 6 months later and buy in July or something, they're going to count that as a sale. So just the transparency alone in the conversion window, in my opinion, and the ability to change it is a huge win and helps marketing teams. On top of that, they're launching all these new features, like the CDP really allows teams to, that have like more complex data stacks or using like data warehouses like a Snowflake or Amazon or a Google Cloud to bring their data in. The Google Portfolio launch is really huge too, because it's allowing teams or brands that have multiple sort of sub brands or different brands. We worked with a large Fortune 100 brand, and they had their one brand, but they had that brand in like 20 different countries. So Portfolio allows you to have, we have this is our Brazil brand, this is our German brand, this is our Italian brand. So it allows you quickly to be able to toggle between those different locations. So I thought, that's going to be huge, and it's way easier to use than the competitors like SAP or Oracle. Again, I think Oracle even shut down Bronto, but from my experience, the enterprises that need that sort of functionality, the Portfolio is way more user friendly. Another continued growth path for them will be this growth in the SMB segments and the entrepreneurial segments. So from my experience, there has been more fierce competition here. I mentioned in the article, at the time of this recording, there's Yotpo is sort of going through a rebrand. This is a competitor that traditionally has had a lot of traction with their review platform. Now they're spending more time on email and SMS, and they did a really what seems to be a successful walk away, sort of this walk away campaign where you get a free pair of shoes if you walk away and migrate to Klaviyo, or excuse me, migrate away from an app like Klaviyo. Another one is Sinlane, and again, I'm seeing these brands get more traction, or these smaller segments get more traction. Excuse me, these competitors get more traction, mainly on like promising lower costs and better service. And I think that they are getting, they're definitely getting traction there with a couple different segments, in my opinion. One would be the segment around stores that are more SMBs that are more direct response focused. They don't really care so much about all the omni-channel features or data features. All they care about is the results. They don't even care about design necessarily. And so in that sense, they're willing to go to a lower cost, assuming results stay the same. Also slow growth SMBs, ones that are sometimes like in maintenance mode, like maybe it's a lifestyle business. It's under 10 million or maybe a little bit over $10 million in sales, and they're just sort of looking to grow casually over the next few years. They're not trying to like disrupt their category or anything. They're not looking for explosive omni-channel growth. They're not going to be, massively scaling their Amazon business or launching into, 5,000 Target locations over the next year. So I've seen those brands get those competitors get some traction there. But again, I'm skeptical that they're gonna like overtake Klaviyo in this category. And I think the one big reason why is just the migrating to another CRM, whether it doesn't matter what it is, to Klaviyo, from Klaviyo, or any market, just migrations in general are a pain in the butt. And especially if you're trying to get the bigger customers from Klaviyo's like mid-market categories or their more premium SMB brands, it's going to be harder because again, you have to not only like convince the brand to do the migration, but also you have to successfully execute the migration. And from my experience, the bigger the store, the harder the migration. The harder their migration will be, and the odds of it being successful, or unsuccessful increase. And the reality is, like, you really need someone who's very capable of executing that migration. And a lot of times they're not on the org chart at the actual e-commerce brand. They're agencies when they do them. Sometimes they typically have someone that can do them, but those are normally their best people on their team. They're not always readily available. And you need someone that not only understands like email marketing and stuff like that, but you also need a team that understands like all the tech stack things, the issues that could go wrong with this app or that app that sometimes has nothing to do with email marketing per se, but everything to do with the conversion and success of the store. And it's hard to find those people on an agency org chart. And then on a SaaS org chart, like I've seen sometimes the actual competitors, the SaaS competitors want to do this themselves. I've seen just that be an absolute disaster. Those people, again, they don't really have the skill set. They're more sales teams, or like customer service teams. These SaaS apps, they don't really have the project manager people on their team or the people that really understand the entire e-commerce marketing stack to really successfully pull off that migration. So it's an uphill battle to get migrations done. You really have to know what you're doing, or you really have to have somebody that knows what they're doing. So I think it's going to be tough. Again, you have to close the sale. You have to then get it successfully migrated over. And if it's not done perfectly, it's not going to be successful. And a lot of times it's super easy to just migrate back to Klaviyo. And again, if there's any drop in revenue, if there's anything signaling that, hey, this is hurting our brand reputation by being on this new platform, brands are going to kill it and revert back to Klaviyo. I've seen it over and over again. Again, just in these entrepreneurial segments and these SMB segments, I do see, again, they're trying to compete on lower price and better service as well. And if a price war is coming, I think Klaviyo is going to win that. Again, this is the worst positioning strategy. If you're going to lower your price, and all things are equal and price becomes equal, the company with the best features is going to win. So I'm pretty bullish on Klaviyo to win that. And then the customer service, I think that was valid, but Klaviyo has gotten a lot better post-pandemic. I share in the article, I share a lot of examples of how they've gotten better, especially if you're a large scale-up brand. A lot of times you get a CSM or like a more senior person who will support you, and you get like priority access with support. So it's really gotten a lot better. Also, I'll get some more like bolder takes here, but I think that Klaviyo is really well positioned on the AI trend. So if you're an investor still thinking about investing in Klaviyo, you've made it this far. When you compare it to HubSpot and Salesforce's AI, I've gone through all of them. Klaviyo competes with both of them head to head. Yes, those CRMs are a little bit more advanced in terms of like functionality around sales enablement, and Klaviyo has traditionally been a CRM mostly just for B2C, not B2B like Salesforce and HubSpot. So it's missing some functionality there. But in terms of like the actual AI that you can use on the marketing side of all of these CRMs, Klaviyo is just as capable, if not better in some instances. We're using it a lot to save time. You can do this define with AI across their entire like flows, segments, campaigns, and we can basically just chat with it like we would chat with ChatGPT and use prompts, and we're able to build these things out much faster instead of having to like drag and drop and go through all these ands and ors and filters and stuff. That increases the chances of mistakes happening. Another way Klaviyo has really been on the cutting edge. They've been doing AI. They've been rolling out like customer lifetime value AI analytics years before ChatGPT ever came out. So they've really been early adopters on this. And another place we're seeing AI get adoption is, or where we're seeing success with Klaviyo's AI is in using it for optimization, specifically on like the forms, like split testing forms and split testing campaigns and flows and stuff like that. Before this was really challenging, I would see a lot of brands, they'd be like, oh, I have this, A/B testing idea. Then they would just forget about it. They would set it up and it would be running in the background forever. They would actually forget to choose a winner. But with AI, you can now, or Klaviyo's AI, it'll automatically now choose a winner. So it's really, again, and that's going to help optimize the account, drive more revenue. We're still very early days with AI. We're still like, it's still not like adding a ton of value just yet. But I think that when we get to that stage in the cycle, Klaviyo is, ahead of its SMB and entrepreneurial segment competitors. You don't hear anything about AI really much on Yotpo's site or Simlane, another competitor that's gotten a lot of traction. So they're way ahead of them on that. And then again, when it comes to the CRMs that are more upmarket, like their competitors, they're way ahead of ListTrack or Adobe Campaign, all that. And then the market leaders like the CRMs, like HubSpot and Salesforce, I think they compete head to head. I think Klaviyo's AI competes head to head with them, to be honest with you, in the marketing cloud. So they're very well positioned there. I think another thing we got to look out for in the next coming quarters is will there be any acquisitions? Will Klaviyo make any acquisitions? They historically have not made a lot of acquisitions. That has not been a path of growth for them. I think they've only done 2 so far. But when you look at Salesforce, one of the main reasons why they've risen to over $200 billion in market cap is through acquisitions. They've acquired Slack for like $30 billion. Tableau is one. MuleSoft. These were all like huge acquisitions. And even HubSpot to some extent has been active. They've done 10 acquisitions. So I think that, there is a lot of acquisitions probably on the table for Klaviyo. I don't know. I don't have any insider knowledge of any of them happening, but I think that they have a lot of options. They could go for acquiring CRMs that are in these markets that I talked about earlier that they're trying to get into, like restaurants or grocery stores. I think they could consolidate the e-commerce market and acquire some of the competitors I've mentioned, like a Sinlane, a Yotpo, or an Attentive, and just sort of, that's an easy way for them to increase their revenue and really consolidate and strengthen those SMB and entrepreneurial markets, so that as those businesses mature and move into the enterprise or mid-market, they'll still be on Klaviyo. I think they could expand vertically too. There's a lot of stuff going on right now with zero-party data, and this being a very fast-moving trend. And there's a lot of sort of apps that some of these SMBs and mid-market Shopify stores are using. Rebuy is one I see a lot of them using to increase trend AOV on site. Octane AI or anything around quizzes or forms, I could see them doubling down and making an acquisition there, or these landing page builders. I think that those are all probably on the table. CDP, for example, this is a big. I haven't talked about it much, but this is a big thing they rolled out, a customer data platform, really to attract more enterprise customers. And a lot of the SMB and entrepreneurial segments, they don't really know what a CDP is. They don't really use CDP. But the reality is they are spending hundreds of dollars a month on some sort of data attribution tool. I see most of my clients are using something like a Triple Whale or an Elevar or a Northbeam or a Little Data or a Lifetimely. These sort of couple $100 a month, and it allows you to track attribution better in this. If you're really familiar with what's going on, there was a iOS 14 update a few years ago that blocked the Facebook tracking pixel, and it's just harder for these brands now to track revenue attribution, and they're using these tools much earlier on now because of this. And could Klaviyo make an acquisition? I mean, could they just build one themselves? Probably, I don't know, but I mean, they could. I think that is a growth path there. So it's going to be exciting to see what happens. I think that we're going to see some acquisitions probably in the next couple quarters, and that's obviously going to fuel revenue. I mean, they have like something like $700 million in cash. So I think that pretty much everything that I mentioned, they could do all those apps I mentioned. I think they could do a deal with that amount of cash there. So it'll be exciting to see what happens there. And then lastly, this is the boldest take of all. Like, does Klaviyo get acquired? I would probably say no, but if someone asked me this at the beginning of the year, I'd be like, that's crazy. They're a publicly traded company. But we saw, this is filmed in August. We saw earlier this year, Google was trying to acquire Hubspot. And for whatever reason, that deal didn't happen. I don't know why it didn't happen. My guess is probably it wasn't going to pass regulators. Also, maybe the valuation was too rich. It would have been reportedly Google's biggest acquisition. But the reality is kind of like what I brought up with with iOS 14 and stuff like that. We're in an era now where it's hard for apps like Facebook and Google to really track attribution because Apple is blocking the pixel. And so they need more zero-party data to feed in to their algorithms, so that way clients can get more accurate reporting and invest more in advertising. Because this is really still the main revenue driver of an app like Google or Facebook or something like that. So I think that it made sense. It makes a lot of sense why Google might want to acquire HubSpot. My question is, okay, if you're interested in HubSpot, why not acquire Klaviyo? I mean, it's way cheaper. It's under $10 billion. It's not $25 billion. Maybe that improves the chances of it passing regulators. Also, I think that when you think of HubSpot, it's more of like a B2B platform. Klaviyo is more B2C, and so I think you're getting more customers. I think the e-commerce advertising market, I think, is probably bigger than the B2B sales market. I don't know that, but there's a lot of people spend a lot of money on Facebook buying ads, like a lot of stores. And also a lot of brands spend a lot of money buying Google Shopping ads or retargeting ads or YouTube ads. So I think that it makes sense for both of those companies. And on top of that, they both have the cash to make that deal happen. Google apparently has over $100 billion in cash. Facebook over 50 billion. So they could probably get the deal done, assuming that they really want it, they like the valuation, and it's going to pass regulators. Another thing you could look for is a Shopify acquisition. I think this is less likely, but Shopify already owns 11% of Klaviyo. So would they consider just buying the whole thing? Again, it would be a very easy way for them to just double their revenue, and maybe not double their revenue, but really increase their revenue overnight. Again, you have all these Shopify Plus stores, all these Shopify stores using Klaviyo as well. Sometimes there's reports that I've heard stories of some people spending more money on Klaviyo than they spend on Shopify. So again, if you have all of this customer concentration already using Klaviyo, you acquire them and they're the same customers you already have, and you increase that monthly transaction size. So I think it could be an interesting play. The reason I don't think it happens, I don't know if Shopify has enough cash to make it happen. I think they only have like $5 billion in cash, so they'd have to get creative to structure that deal. But it could be a play. I like that over them starting their own logistics business, for example, which they had to apparently shed last year, a year or two ago. So to me, it makes sense. I just don't know if that's like the biggest priority or if they want to do a deal that big. I also think Salesforce is probably on the table too. Salesforce is traditionally more B2B. They have some enterprise brands using Marketing Cloud, part of Marketing Cloud for sure. But do they want to swim more down into the SMB mid-market segments? Also, they have a track record of acquiring publicly traded companies. Slack was publicly traded when they acquired them, and it was like $30 billion. So it was a much higher market cap than Klaviyo. And so do they want to grow vertically and get more into like e-commerce, CRMs? Maybe that could be a play. I think Amazon could be on the table too, especially if they're trying to compete more with Shopify. They also have a lot of Klaviyo brands also sell on Amazon as well, and maybe they want to use that in their Amazon advertising. So I could see that being a play as well too. So I think it's really interesting thought exercise. Again, I think it's very exploratory, very out there, but given the rumors about Google and HubSpot that were happening earlier this year, I think this conversation is probably deserves more and is on the table. So, if you made it this far, this is like 37 minutes of me ranting about Klaviyo, where I see the stock going, where I see the business going. If you made it this far, feel free to, I would love for you to drop a comment. Disagree, agree, comment with anything mentioned. Would love to hear what you're thinking. And wait till the next one. We have some other great videos, and I'll see you guys next time.